accountancy series. Now today we have a special guest around, and his name is Mr. Idris. I'll be giving you guys his profile very soon. But the topic for discussion this particular week is in respect to ISA 250. Now ISA 250 is international standard on auditing, and this is actually understanding international standard, understanding laws and regulations in an audit of financial statements. So it will be doing all the needful. It will break it down for us. It will let us understand it. This is a major area that a lot of auditors have challenges with, and it will come to dissect it for us. Now, without further ado, let me introduce our guest speaker today. Mr. Idris is a degree holder in accounting. He's an ACCA member, an ICANN member. In short, he has so many other qualifications that I can't start mentioning, if not to use only his qualification to talk about the podcast that we have today. So he has a lot of qualification. He's currently in the audit practice. He has been teaching this thing for more than 2 decades now. He's been on it. He's a fellow in all the institutions that I've mentioned, and he's also one of our directors at ATRC. And here we have him today, Mr. Idris. Welcome, Mr. Idris.
Thank you very much.
Thank you for being part of us today.
Thank you.
Yeah, so let me again introduce myself, and I always introduce myself last. My name is Jimo Abdulkabir, and I'll be your host for this show today. So yes, let's jump right into it. Before we go into ISA 250 in broad, let's talk about it on a very mild level. Just give us an overview of what this particular standard is expecting us to know.
Okay. Thank you very much. It's my pleasure to be here today. ISA 250 deals with audit consideration on laws and regulation. Generally, what the ISA simply means International Standard on Auditing. It's a guideline, a principle that guides the auditors on how to perform audits. Just like we have IAS and IFRS that guide us on how to prepare the financial statement. So if you are auditor in practice, there is a need for you to understand the guideline of International Standard on Auditing. ISA 250 focused on one area, and that is audit consideration of laws and regulation. The ISA require auditors to understand laws and regulation that relate to the client business. You need to know what are the laws that your client need to comply with, and then be able to identify if those compliance are in order. So generally, this is what the ISA is all about.
Okay, now thank you for helping us to quickly summarize it, because now we're now going to go into it broadly. Now, you said laws and regulation, and what caught my attention is the fact that we have a lot of chartered accountants,
yes,
or we have a lot of quack accountants. Let me start with that probably are just stealing their boss's seal and stamp, and they will just, any financial statement for 50,000 naira, they just seal and stamp. Now, do these people, do they understand that there are some laws and regulations that their client needs to adhere to, which need to also be considered in preparing the financial statements? I think they don't. So this particular session will help them to also understand that there are some key things that they need to understand. So can you help us now to properly define what this standard means by the laws and regulations that you need to take into consideration?
Okay, thank you very much. Based on ISA 250, there are certain scope of ISA 250 that I would like to talk about. ISA 250 covers all laws and regulations that a client business must comply with, excluding laws and regulations relating to preparation and presentation of the financial statement, which means it excludes IAS and IFRS. Now, talking about whether practice auditors understand this ISA, yes. For you to be a chartered accountant and receive ICANN license to practice, there are certain conditions and criteria that you must meet. So one of them is basically ICANN need to be sure that you know these laws. They are even interview, and you have to do like 36 months of attachment, apart from passing ICANN exams. So yes, anyone that is a practicing auditor definitely has sound knowledge of the ISA. If he's not applying it in the practice, that is another thing entirely.
Sorry, I interjected.
Yes,
the
yes.
point I was trying to bring out here
Yes,
is I'm not talking about the ones that are qualified.
Okay.
I'm talking about
The quacks.
Oh, the
okay.
quacks are the quacks are not qualified.
Okay.
They've not passed through these rigorous processes.
Of course.
They are just opportune to get a seal and a stamp, and then they just start giving a particular audit opinion without even doing proper audit and check. So, but I'm saying that even for them today, at least they will learn something that there is a particular laws and regulation the client is supposed to follow, and this is part of the audit process. Okay. Now we are talking about the laws. Can you emphasize or expatiate more on the type of laws that you mentioned other than the financial reporting, because they are not supposed to be preparing financial statements, since they are supposed to be independent of the preparation of the financial statement. Well, can you make a little bit emphasis on the laws that we are supposed to take into consideration?
Thank you very much. The ISA specifically mentioned two types of laws and regulation. The first one is laws and regulation that have direct impact on the determination, classification, quantification of amount that are included in the financial statement. So in a simple terms, any law that will impact the figures accountant prepared in the financial statement is called laws and regulation with direct impact. The ISA gives two critical examples. The first is the taxation laws, that is the Tax Act. Like example, the Finance Act. The Finance Act changed some structure of the tax. For example, before the Finance Act of 2019 and the current one of 2023, company pay tax on 30%, flat rate. Regardless of your income, your tax is 30%, or you pay minimum tax if you make a loss. However, with the Finance Act, there is now structure of your taxable tax liability. If you are a small company which earn 25 million below, you pay tax at 0%. Then average company, 25 million to less than 100 million, you pay tax at 20%. And then the large company at more than 100 million, you pay tax at 30%. Now, this means that the amount of tax that will be recognized in the financial statement has changed. And auditors are required to audit the financial statement. To audit simply means to check, to independently examine the numbers, the amount, the figures that are in the financial statement. And if the tax law change, like we mentioned, the income tax in the financial statement will change. The deferred tax in the statement of financial position will change. So these laws and regulations are direct impact on the financial statement. We also have another direct impact on pension. Pension fund. Pension Act of 2014 is the new pension act that Nigeria is applying currently. Before 2014, the previous pension act allowed company to deduct employee 7.5%, employer 7.5%. With the advent of the new pension reform act of 2014, the minimum deduction is 8% employee, then 10% employer. So you see the amount of, and pension is part of administrative expense in accounting. So the amount of administrative expense has gone up or changed. And this means it has direct impact on the financial statement. So the second one is the laws and regulation that has no direct impact, according to ISA 250. However, ISA 250 mentioned that they may have fundamental impact on the operation of the business. These laws don't have impact on financial statement, but they will have impact on the business. Now let's take ATILC for example. There are certain laws that ATILC need to follow. For example, company law. ATILC also run ICANN and ACCA courses, which means they are supposed to register with ICANN, have ICANN licenses. They are to need to be chartered accountant. I think these are some of the conditions to run ICANN practices. Now, these conditions are laws. And ATIs also need to follow CAMA, Company and Allied Matter Act. ATIs need to apply employment laws, so many other laws. These are business laws. They don't have direct impact on the financial statement. So these are the two types of laws and regulation, and then the ISA elaborate further. I don't know if I've answered your question.
You have done so well. I just remember one of my client the other day.
Okay.
He said that because he put a CCTV in front of his building, and the armor people came to fine him of almost 2.5 million. And that actually is an example of the one that affects the financial system. So we should take note of that. In case of AMAC come to give you letter, it has impact on the part of the regulations that have impact on the financial statement. Now we've talked about the regulations that have impact on the financial statement and the regulations that don't have impact on the financial statement. Now let's talk about the responsibilities. What is the responsibility of management in respect to compliance to these regulations, and what is responsibility of the auditors in respect to compliance of these regulations?
Now, interesting. The ISA mentioned that management has key responsibility. As a manager and those charged with governance within the organization, you are supposed to understand the laws and regulations of running your business. As a director, as a captain of industry, whatever industry you are in, there is no excuse to say, I don't know I'm supposed to pay tax. I don't know I'm supposed to remit VAT on 21st of every month. I don't know that we are supposed to pay our tax liability on social date. It is not an excuse. Organizations, management, and also those charged with governance, the board of directors, are supposed to be very sound on all the laws and regulations that their business is supposed to comply with. The ISA also mentioned that monitoring compliance is also one of the jobs of directors and management. As directors or management, monitor, are we complying with this regulation? Because just like you mentioned in your case study of AMAC, lack of compliance, we call it NOCLA, non-compliance with laws and regulation, either through omission or commission, could be an offense. It's a penalty or fine. There are so many cases where organizations were fined.
Hello, welcome to ATLC Business School, a professional training institution that provides both ICANN and ACCA tuitions to students taking the professional exams. At ATLC, we have conducive learning environments, qualified tutors that can help you pass your exams. We have tutors with years of training experience, and our tutors can guarantee you a pass in subject matter areas. Why not join us today and let's be part of your success story. ATLC, your mentor for life.
For non-compliance with the law. You heard recently of some banks that CBN threatened to withdraw their licenses. This is due to lack of compliance. So it is a responsibility of management to monitor compliances. It's also responsibility of management to document those laws. Have document of those laws, understand them. It should be part of the organization operational manual. So compliance is followed. So these are just few. What the ISA mentioned should be the responsibility of directors. There are more. So the responsibility of the auditor, you mentioned that the auditor, let's be clear, the primary objective of audit is to express an opinion on the financial statement, on whether the financial statement shows true and fair. In another word, whether it is prepared in accordance with applicable financial reporting standard or framework. That is the primary job of auditor, statutory audit. However, in order for the financial statement to comply with the law, ISA 250 requires the auditor to make sure he obtains sufficient appropriate evidence to support his opinion. Here we say you should gather all the facts. In order to gather the fact, there are certain audit procedures that the auditor need to do to check compliance, because lack of compliance will affect financial statement, like we mentioned, either directly or indirectly. So these procedures are many, but let me just cut, if you can permit me to talk about one. So one of the first procedures for practitioners that are listening is for the auditor to ensure that he inquire from management. Ask management whether there is any breach of laws and regulation. Is there any penalty? The auditor also need to read correspondence, like email correspondence, because sometimes, for example, AMAC, FRS, CBN, etc. that we mentioned, all the regulators, they don't just come in to put in red tape. They first send email. So read email correspondence, maybe you can see some red flag. There is an issue relating to tax, compliance, and you can now raise a discussion. Then there is also something we call written representation. In later that management should write to confirm that they have disclosed everything to the auditor and they have fulfilled all the necessary.
Okay, I think you have mentioned some you just remind me of my days of actually writing the professional exam.
Okay.
Funny enough, you see these three procedures.
Yes.
It's kind of applicable to all audit procedures,
It is.
Which is the letter of representation, like you have mentioned, the what they call it, inquiries. Also the review of correspondence. Those things are like standard audit procedures. So I think for those that are also writing professional exams, they can key into this because this will help them to better understand the ISA on ISA 250. Now we have talked about the responsibility of management and the auditors. Now let's talk about what are the further requirements of ISA 250 in respect to making sure that the auditor is doing his own part of the job. What are the further requirements that we can take into consideration?
Well, like I mentioned from the beginning, ISA 250 really wants the auditor not just to focus on the financial statement alone, it should also focus on the business regulation. Accountant are a bit backward a bit in understanding business operation. And most time you go to a company, accountant focus only on financial transactions. Some don't even understand the product the company is selling. So sometimes under this breach of laws of regulation, that is where you find a lot of issue like frauds. You find money laundering. Some organizations use their company, some directors use their company as a front to commit money laundering. So it is important, ISA 250 elaborates that the auditor understanding of the laws and regulation is very key. At least before you embark on the work, during planning, understand all the laws that the company will comply with. And if necessary, then you now focus during the audit, focus on the ones that have direct impact. But during planning, at least have a general idea of all the laws that the entity, your client is required to comply. Like I said, it's directly affecting or creating opportunity for money laundering to many organizations. Organization dealing with cash base a lot. So if you understand, is this company such that we deal with cash-based transaction? All these are red flag for money laundering.
Okay, now we have talked about the requirements. Now let's come back to the fact that there will be non-compliance definitely. So when the auditor suspects non-compliance, what should the auditors put in place?
Well, when an auditor suspects non-compliance, ISA 250 advise bring out some principle or procedures or what the auditor should do, either when he's suspected or even identify non-compliance. As an auditor, you have to first pause, understand the nature of the non-compliance, understand the extent of the non-compliance. What is the nature? Is the non-compliance affecting the financial statement? Is it affecting the business? Is it such that create opportunity for fraud? So understand the nature and the extent. The extent here we say, could it be material? Then it is also important that if the non-compliance is such that it's affecting the business or it's affecting major regulation. Example, your client has not been remitting tax. You identify during the audit that they have never remitted tax. So, which this is a major non-compliance with Nigerian law. On its own is an offense. So what do you do as an auditor? There is a need to understand if management really understand the law. Of course, everyone, like we mentioned, if you are running an organization, you should know the laws. So the auditor, I need to bring this to the attention of practitioners. There is a need to seek legal advice. The ISA mentions seek legal counsel. Are we together? Then you can now evaluate other impact, like the impact on the financial statement, the impact on your opinion. Could this affect the final opinion that I will give as auditor or not? Then if you think that management, the top management will not be aware of this non-compliance within the middle level, then you can report to the higher authority. That's what the ISA said. Report to the higher authority. If management are involved, report to the higher authority, those charged with governance. If they are involved, then you need to seek legal advice and then maybe consider resigning so that it does not affect your integrity as a professional.
So what you have mentioned now, in respect to reporting to management and in respect to seeking legal advice, these are basically what you should do in the event
you identify
or
suspect non-compliance.
Okay. Now we have talked about that. Okay. What about the potential impact on the audit report? Should you identify these things and then they did not actually implement, they didn't correct it, or you identify it and you have bring it to the attention? What are the potential impact on your financial or your audit reports?
Well, as you are aware, auditor express opinion on the financial statement, and then this opinion are included in the audit report. We have another ISA which guides us on how the report format, the opinion need to be set. It's called ISA 700. It could be subject of another discussion. Now, under ISA 700, under the content of the report, if there is a non-compliance that the auditor identified, and it maybe this does not affect money laundering issue, which can put the auditor integrity in question. Maybe it's a non-compliance that probably has not been properly disclosed on the financial statement. Because like the fine in the last illustration, defined by AMA, etc., there is a standard that require that provision should be made for such kind of event. IAS 37 deals with provisions, and it's an accounting standard that require that once there is a legal or constructive obligation and you can quantify the amount and there is a probable outflow, then that amount should be recognized. Now, if it has not been provided for in line with the standard, the auditor need to consider whether it is material, because we have a benchmark, a standard benchmark provided by the another ISA called ISA 320, and that allow us to know if this amount is material. Material is like is significant. Let me use a layman term, significance. So if it is material, the auditor need to understand how it will impact on the user's decision, because people are relying on that financial statement to invest in the company. So if it is material, auditor may need to state it in his opinion. That means modify. Modify means say in his opinion that the financial statement does not show true and fair view, either in part or in full.
Okay. Now, just to come back to that, in terms of the opinion now, I know that we have other types of opinion in respect to we that we are in the practice, and is it going to get to the extent where you are giving an adverse opinion, or is just to the extent where you are giving a qualified opinion, where maybe you are just giving except for this, then this shows a true and fair view?
The type of opinion you will issue will depends on, again, the materiality. Like I said, if the non-compliance the quantitative amount or the nature of the non-compliance is material, and also what we call in practice pervasive. So pervasive means that the figure is very large. What is wrong, what they didn't recognize is big. It affects every part of the financial data that they are reporting. Auditors are required to say that the whole financial statement does not show true and fair view, and that is what is called adverse opinion, which means you have stated that everything in the financial statement did not comply with the requirement of the IAS and IFRS. However, if it is not pervasive, which means it does not affect every part of the financial statement, it only affects one part. Let's say, for example, there are fines which they did not recognize in liability, and the fine only affects liability. It's not affecting every part of the financial statement, so it doesn't have pervasive impact. Then the auditor need to call the user's attention, but it need to be specific, and that is what we call qualified opinion. The auditor will now state in his opinion that except for this fine that was not disclosed, every part of the financial statement shows true and fair view.
We'll come back to this issue of reporting another day, which is I say 700.
700,
We'll
yes.
come back to, because I've always asked this question. Why is it that I've actually gone through so many financial statements, and there's something that pricked me. I hardly see a qualified opinion financial statements. Most of the financial statements I see is true and fair view. So I think we need to revisit that another day, so that we can really understand the issue of reporting on financial statement. Yes, thank you very much for this insight you are giving to us on ISA 250. It has really been insightful. We have learned a lot from the beginning of what the standard is requiring from us, to the point of impact on the auditor's opinion in terms of his report. We have seen the flow, and we have seen also the audit procedures that should also be carried out by the auditor when such things come to light. We have also talked about the impact of the responsibility of management and the responsibility of the auditor as well. So we've discussed a lot of things within this short time frame. We really appreciate your coming to this platform today to have this discussion with us. We will definitely be involving you in other discussions that relates to other ISAs that are important to practitioners out there to understand. We truly appreciate your presence here today. I will be seeing ourselves again in another 80-hour session. So yes, today's session, is really on the what they call it, ISAs, which affects auditors. But this also affects those students that are probably taking the AA exams, both be it ICANN exams and ACCA exams. And this is the platform for you to keep watching. Stay tuned. You will see other relevant topics that affect finance, accounting, auditing, and other related part of the industry very soon. So stay tuned, and please make sure you like and subscribe our videos. We'll keep giving you guys more of this. Thank you very much for watching.